50% in aggressive easing. Clearly, Alan Greenspan was greatly concerned about the health of the U.S. economy prior to the attacks. Now, let's take a look at what happened immediately after the attack occurred. As mentioned, all the U.S. equity markets were closed until September 17. This meant that no one could hedge their exposure or cover their terrorism. 155. Figure 9.2 U.S. Generic 10-year bond yield source, used with permission from Bloomberg LP. DXYCURNCY. Range period. The 1st of March 00, the 1st of January 03. Daily. Bar chartist. Upper. Lower. None. MOV Avings. MOV AVG. Currency. Figure 9.3 U.S. Dollar Index. Source. Used with permission from Bloomberg LP. 156. Politics. Figure 9.4 U.S. Federal Funds Target Rate Source, used with permission from Bloomberg LP. Risks on U.S. equities. However, investors could sell on other countries' stock markets, and they did. The German DAX fell 8% the day and opened the next day down another 4%. This also meant that there would be enormous pressure on stocks when the markets did reopen. This anxiety over what would occur spilled over into currencies and bonds. Fed dollar was immediately sold and bonds were bought aggressively. Actually, the selling of the US dollar began before the second plane even hit, as most of us stared, dumbfounded, at their TV screens. There were cool-headed and cold-blooded traders acting aggressively and selling the buck. Eventually, stock portfolio managers would join the sellers, as this was the proxy hedge for equities that traders could take advantage of and reduce the damage to their portfolios that would come when stocks reopened. Only of the first actions that the US government took was to ground all air traffic. No one had any idea if there were more terrorists on their way to commandeer planes, but grounding all the planes in the country would stop them. In conjunction with this action, the airline and transportation industry would come under heavy selling pressure when equities began to trade. Airlines were already under pressure due to increased competition, high labor costs, and increased fuel costs. Figure 9.5 shows the Dow Jones. Terrorism. 157. Figure 9.5 Dow Jones Transportation Average Source, used with permission from Bloomberg LP. Transportation average, which at the start of September was in the middle of a range it had been in since the beginning of 2000. It dropped 800 points for a whopping 28.6%, which is more than the Dow lost during the 1987 crash. Here's what I wrote at the end of the week, after the stock market reopened. I include this commentary because it captures the moment of what was happening and some of the psychology of the markets at the time. What a week this day was in the stocks. Pre-opening, markets around the world were down on average 6.5 to 7.0%. Huge rally started around mid-morning after said the expect to withstand the effects of last week's terrorist attacks and post-double-digit earnings growth in 2001 and 2002. Fedo briefly went into positive territory, bringing the buck with it, only to have that reversed and back down more than 200 points. Since the September 11th attack, there have been over 110,000 announced job cuts in the United States. The DJIA has dived over 13.3% prior to today's close. And the dollar has fluctuated all over the map, with the Swiss franc outperforming and the Australian dollar getting punished. The long bonds have followed this exceptionally volatile pattern, going down after Congress stated their 158. Politics. Intention to break the lockbox and Social Security and spend like crazy. The Treasury announced a cancellation in the bond buyback program as well. But the bonds rallied on Friday after the Dow started the day down more than 400 points. Everything has changed since the attacks, and it keeps changing at an increasingly rapid pace. And there will be a cultural change as well. Forget about all those boy and girl bands with their belly buttons showing and their songs about as deep as that body orifice. Instead of buying Britney Spears, Oops, I Did It Again, they'll be looking at Luciano Pavarotti's greatest hits containing Ave Maria. The focus will shift to darker images and realities of human and financial carnage that only war brings. The thoughts turn inward during these times and become centered on more basic needs and desires. Instead of can I get a piece of that IPO, it's can I sell my stock at less than a 20% loss. Instead of should I jump from this internet company to another for more pay, it's I hope I don't lose my job. Instead of we are sticking to a strong dollar policy, it's a weaker dollar may be good for the economy. The only constant is change. And big changes are what you can expect in the economic statistics once we begin to get September's numbers and how big a black hole they make in the economy. The first one of importance will be the Chicago Purchasing Managers on September 28 and the market is looking for 42.5. Next week will also be the last one for September and therefore could see the abatement of the yen repatriation. But I have a hard time going the same way as the Bank of Japan, so I'm not yet looking to go long dollars. Look for more details to emerge on what the US plans are in our war against terrorism. We know there were many Rumelsand bomb threats this past week here and abroad. Our allies are saying that we have asked them for their opinions on a post-Taliban government. A post-Taliban government has a certain ring to it, doesn't it? I think what's interesting in what I wrote is that the markets were beginning to look toward how bad the economy was going to be hit due to the attacks and this would start to show up in the first batch of economic statistics for September. These would be released in October and the unemployment rate would be the first big one. The unemployment rate remained unchanged, but hen and farm payroll dropped 199,000. Here's Fati reported on October 3, 2001. Ford and Nortel filled the air with the odor of 15,000 more job cuts, Nortel, and a larger than expected third quarter loss, Ford and Nortel. Daimler Chrysler's U.S. operation got into the selling act as terrorism. 159. Well, saying that sales fell 28% in September and it would shut 4 plants for 1 week and 1 plant for 3 weeks. Stock markets around the world are off on the news, with the telecom and auto stocks taking the biggest hits as you would expect. But here's what I didn't expect, the euro to be gaining ground in every currency. Euro, name it, CHF, JPY, GBP, USD all have lost ground to the mighty joint currency. Some of the EU GBP was related to Tony Blair's comments about joining the euro in this current parliament, if they meet all the criteria. Don't think that was anything new there. The move probably came on the back of some Vodafone share selling, and given what's happened to telecoms overnight that makes more sense. No, take a look at the stock market. If that sunk tovelos immediately after all the markets reopened. It rallied into the beginning of October and then went sideways. It was a bipolar market, swinging between depressed state from the 9/11 attacks, along with fears from the new anthrax attacks, and euphoric state from the Federal Reserve cutting interest rates 100 basis points. As we have learned throughout this book, the largest factor impacting the financial markets over the long term remains the cost of capital or interest rates. If a central bank aggressively responds to an event by pumping money into the economy, it's likely that the country's stock and bond markets will rally based off of cheaper money. In this case, there were tremendous fears that had to be overcome initially, but no more attacks came. As of the writing of this book, none have still come to US soil. The problem for the Federal Reserve was that this event was unprecedented and none could tell what medium-term impact it would have on the economy. Theon Lithing the Fed called Dowest to help reopen the stock markets and begin to pump money into the system and see what would happen. Greenspan and company, including current chairman Ben Bernanke, coldly tried to forestall the downshift in the economy that was already occurring prior to the attacks. This is why it's so important to have the context of what was happening beforehand to know what can happen afterward. Humpty Dumpty comes to mind when you discuss what happened in 2002. The Federal Reserve's efforts and rate cuts couldn't stop the economy from slowing. The Fed did something very crazy. It cut rates to 1.75% in December 2001 and then cut them to 1.25% in November 2002. The Fed would eventually take them all the way to 1.00% in 2003 and leave them there for an entire year. All of this activity sparked one of the largest, most consistent downtrends for the US dollar the foreign exchange, FX, markets have ever seen. Things got so bad for the Fed that future Chairman Ben Bernanke gave a speech in which he said that if things got worse, the Fed could metaphorically take a helicopter and spread money. 160. politics throughout the country. Hence, the development of Bernanke's nickname, Helicopter Ben. To distill the opportunities down to a residue, here's what you could have done. Sell foreign stock markets that were closely aligned to the US market, sell the US dollar, and buy foreign bonds and US bonds. When stocks reopened, the worst thing you could have done would have been to sell US stocks. You should have bought more equities and actually bought the US dollar index. However, these would have been short-term trades, less than 2 quarters, as the financial markets reverted back to the direction they were headed in prior to the attacks. This is consistent with what occurs after a hurricane. So as we head into the next examples of terrorist attacks, remember the 3 important factors we have learned from the other chapters. 1. The context in which the markets were previously operating. 2. The event itself and where it physically took place. 3. The response of the governing central bank to the event. These are the key medium-term determinants of overall market direction and where it's likely the markets will return to after the shock of the event has passed. March 11, 2004, Madrid train bombings. Here's what I wrote on the day of the attacks. After a series of bombings in Madrid, the dollar is mixed against the major currencies with the high-yielding Australian and New Zealand dollars getting tattooed. US bonds have rallied on the news, and stocks have fallen further, adding to their losses from yesterday. The bombings are a sad example of how international incidents affect us all. According to the New York Times, powerful explosions rocked 3 Madrid train stations Thursday, just days before Spain's general elections, killing 170 rush-hour commuters and wounding more than 500 in what officials called the deadliest attack ever by the Basque separatist group ETA. This is a massacre, government spokesman Eduardo Zaplana said. European currencies were sold at this time and their stock markets dropped. But a radical Basque nationalist leader said Thursday he did not believe ETA was behind the attack. Terrorism. 161. Which could have been an operation bisector soft stance, Reuters. Immediately, the financial markets moved to a safety play theme with US bonds moving quickly higher, US stocks were sold, and the dollar was hit hard against the Swiss franc as the markets leapt to the idea that Al-Qaeda was behind the event. However, ETA's leader may have just been playing dumb, as 2 ETA separatists were recently arrested with a large amount of explosives. The bombing occurs just prior to Sunday's election in Spain, which had both major parties refusing to meet with the separatists. Previously, ETA's worst attack killed 21 people in 1987. Again, NYT, Spanish officials had said ETA was against the ropes following the arrest last year of more than 150 members or collaborators in Spain and France, including the leaders of ETA's commando network. Last year ETA killed 3 people, compared to 23 in 2000 and 15 in 2001. Obviously, this is a major step up in scale for ETA, if it is them, and to some extent may point to outside assistance. And that would truly be troubling. This encapsulates much of what was happening during the first hours after the attacks. In hindsight, we know that there were 10 explosions that went off at the height of the Madrid rush and 4 commuter trains. The attacks killed 191 people and injured more than 1,700. Since Spain had been hit in the past by Basque separatists known as ETA, the suspicion immediately fell on them. The fact that the group had recently been caught with a large amount of explosives gave the appearance that they were planning such an attack. The attacks were carried out just 3 days before national elections were to be held to determine the presidency. In that time frame, it was very clear that the bombers were attempting to influence the outcome of the election and change the policies of the ruling conservative government headed by President José María Aznar. A month prior to the election, it was almost a lock for the ruling Conservative Party, with Aznar anointing his successor and the policies of supporting the United States in Iraq seeming to be intact. Spain's ruling party lost the election, though, and the socialists took over with José Luis Rodríguez Zapatero at the helm, ending 8 years of conservative rule. Zapatero immediately said he would pull Spain's troops out of Iraq in a major swing away from his predecessor's pro-American foreign policy. Spain was due to take over command of 9,000 troops in central Iraq on July 1, 2004, which was to coincide with the time Etabil to turn over control of the country to the Iraqis. Neither event occurred. The election result was seen as a repudiation of Aznar policy to support the invasion of Iraq. If this was Al-Qaeda, Aznar is responsible, according to one demonstrator from the massive protests against the bombings that 162. Politics occurred the weekend after the blasts. Only 48 hours after the government had claimed it was ETA, Spanish authorities found a videotape claiming that Al-Qaeda carried out the Madrid terrorist attacks after 3 Americans and 2 Indians were arrested in connection with the bombings. The tape said the train bombings were a response to Spain's cooperation with the United States and that more blood would flow if injustices didn't stop. Here's what I wrote on March 15. To say that these outcomes encourage Al-Qaeda or other terrorist groups is to understate the obvious. The UK, Japan, and Poland are the next countries that would appear to be vulnerable to such activities, as all have troops in Iraq. Poland has stated that it will not pull troops out of Iraq because of terrorist attacks. Revising our position on Iraq after terrorist attacks would be to admit that terrorists are stronger and that they are right to pursue attacks, said Prime Minister Leszek Miller, according to Reuters. Of course, the United States is the biggest target with a close election looming. Fueling this, Senator John Kerry's lead in the polls and his recent comments that foreign leaders were encouraging his presidential bid because of unhappiness with U.S. policy. According to the Washington Post, Kerry said the leaders were, at all different levels, of government and their support was fueled by dissatisfaction with U.S. unilateralism and an arrogant foreign policy. This kind of talk almost ensures we in the States will face months of rumors of domestic terrorist plots and bombs going off in the lead up to the election in November. One attempt has already been stopped in Karachi, Pakistan. Explosive experts on Monday defused a bomb in a small van park next to the heavily guarded U.S. consulate in this southern Pakistani city, sparing the building from big destruction, police said, according to the New York Times. The thwarted attack came just 2 days ahead of a scheduled visit to Pakistan by Secretary of State Colin Powell. He was due to arrive at the country on Wednesday, but was not scheduled to visit Karachi, NYT. Again stating the obvious, things are a bit shaky around the world today, and this leads to the markets jumping back into the obvious safety trades of long bonds, long CHF, and short equities. To show you how messagey the currency markets are, take a look at the price action in the Aussie dollar where it gapped open around 0.7400 and then fell to below 0.7300 and now is at 0.7350 because no one can quite figure out what all this uncertainty means for that country. For this country, none of this activity is good. Clearly, the first outcome of the Madrid attack was a major change in Spain's government and its policy toward the war in Iraq. Terrorism. 163. Figure 9.6 European Central Bank, ECB, refi rate source, used with permission from Bloomberg LP. Let's take a look at the reactions by the financial markets to the bombings. Prior to the event, the euro was rallying against the US dollar and had just put in new highs for the year. For short-term interest rates, the European Central Bank, ECB, had last cut interest rates from 2.25% to 2.00% back in June 2003, figure 9.6. After the bombings, the euro immediately fell 2.5% against the US dollar and then dropped another 2.5% by the end of the following week, figure 9.7. On the equities, let's look at the IBEX 35 index for Spain, figure 9.8. This is the official index of the Spanish continuous market and is comprised of the 35 most liquid stocks traded in that market. It was at the lows of the year when the event occurred and fell around 250 points in 3 days. However, within 2 weeks, the index fully recovered and was above the levels prior to the attack. Last, the generic 10-year Spanish government bond had a big sell-off, with the yields rising from around 3.80% to as high as 4.30% by the end of the next week, figure 9.9. This is the opposite reaction that US bonds initially had to the 9/11 attacks. Because Spain was a much smaller country in the midst of an election, investors dumped the bonds due to the uncertainty over the outcome of both events. There is another major difference between the attacks of 9/11 and 3/11. The attacks in the United States were more deadly in terms of victims, more. 164. Politics. Figure 9.7 Euro versus US dollar source, used with permission from Bloomberg LP. Figure 9.8 IBEX 35 Index. Source, used with permission from Bloomberg LP. Terrorism. 165. Figure 9.9 Spain generic 10-year bond source, used with permission from Bloomberg LP. Destructive in terms of buildings, and more disruptive in terms of shutting the stock exchanges. There was also the shock of the 9/11 attacks, as they were the first major attacks by Al-Qaeda on American soil. At that point, the United States World hadn't previously experienced such an event and duatoin experience and knew how to react. When 3/11 transpired, the markets were able to contextualize the event and realize that this would not necessarily mean that a major disruption would ensue. The airspace was not shut down in Spain, nor was their train system. The biggest disruptions in Spain occurred due to the protests that happened the following weekend. The biggest indication that this was not a disastrous event for the financial system of Spain was the fact that the European Central Bank didn't think it was necessary to lower interest rates to counteract the potential downside effect. The interesting play would have been to buy those Spanish bonds when they hit 4.25% or so. The bond market went sideways for a month before rallying very strongly to drop yields below where they had been before the event. Once again, they re-established the existing trend in the market. The euro against the US dollar had a very similar play as well. It was rallying pre-auto 3/11, sold off with the event, and then resummed its trend afterward. To a lesser extent, the IBEX was not necessarily rallying prior. 166. Politics. To the attack, did sell off, and then began a major rally that would see the index end at the highs of the year. July 7, 2005, London train and bus bombings. 1st day of the attack, here's what I wrote. The greenback is wildly fluctuating with the news of a terrorist bomb attack in London. The US dollar index is down 0.38 at 90.00. Globally, bonds are higher across the board as a flight to safety is occurring with the US 10-year benchmark at 3.98%. In turn, equities are substantially lower, with markets down between 2 to 3%. Gold is sharply higher by $3.50 at $427.25 and oil is lower by $1.15 at $60.15. Oil at one point was down $2.60 on the news. The markets are known their process of reversing previous moves with the exception of selling the British pound. London was struck by a series of at least 6 separate and apparently coordinated explosions in its subways and buses during the morning rush hour this morning, according to the New York Times. The explosions ripped apart a double-decker bus and caused officials to close and evacuate the entire subway system. Reuters is now reporting 7 bomb blasts. The casualties and death initially appear to be substantial, but it's still too early to tell. Prime Minister Tony Blair is leaving the G8 meeting to return to London. Blair made a brief statement before leaving. It is reasonably clear that there have been a series of terrorist attacks in London. There are obviously casualties, both people who have died and people who are seriously injured, and our thoughts and prayers, of course, are with the victims and their families. Just as it is reasonably clear that this is a terrorist attack or a series of terrorist attacks, it is also reasonably clear that it is designed and aimed to coincide with the opening of the G8. There will be time to talk later about this. It is important, however, that those engaged in terrorism realize that our determination to defend our values and our way of life is greater than the determination to cause death and destruction to innocent people in a desire to impose extremism on the world. Whatever they do, it is our determination that they will never succeed in destroying what we hold dear in this country and in other civilized nations throughout the world. Terrorism. 167. I was watching Fox News on Saturday and they had on an insane number of people, 7, to discuss the housing market on Neil Cavuto's weekend show. One of the interesting choices to discuss that market was comedian Ben Stein. However, He was one of the few commentators to provide a cogent response to what would cause the housing market to decline. Essentially, he said there needed to be an exogenous event to disrupt employment and cause a decline in home prices. An exogenous event, Therastophuropycinahatined state of alert. U.S. Homeland Security has not raised the alert level here yet. Let's hope that exogenous event doesn't hit on our soil today. Expect to hear stories that this is payback for participation in the war in Iraq. Spain and now the UK have been hit. Poland, Australia, and Japan will be discussed as future targets. The market is buying back US dollars as news of a freight train in Turkey that was derailed by a bomb hits the newswires. Airline and travel stocks are getting skewered early in European markets. Both the Bank of England and the European Central Bank left rates unchanged. However, this doesn't exclude action later should the situation warrant it. Obviously, the UK's economy will suffer and had been softening anyway. This will accelerate the process, and perhaps, bring forward a rate cut by the BoE as well. It would be smart for the ECB to do the same. The coordinated attacks hit London during rush hour, blowing up 3 London Underground trains and 1 double-decker bus. The explosions killed 52 passengers, and 700 were injured. 4 suicide bombers were killed. It killed and injured more people than Anasingli attack and was the worst in Britain since the 1988 Pan Am Lockerbie attack, which killed 270. There were so many rumors flying after the attacks it was difficult to keep track of them, from talk of new airplane attacks in the United States to stories of sniper units following a dozen Al-Qaeda suspects in Britain. On July 21, some of those rumors came true as another attack occurred, but the bombs failed to detonate. From an economic standpoint, the major impact of the July 7 attack was a day-long disruption of London's transportation and mobile telecommunication infrastructure. The European Central Bank's Jean-Claude Trichet, the Bank of England's Mervyn King, and the Federal Reserve's Alan Greenspan all agreed that the attacks will not have significant impact on economic growth. The Bank of England didn't cut interest rates due to the event, but did cut rates a month later by 25 basis points from 4.75% to 4.50%. Figure 9.10. With that in mind, let's look at how the financial markets reacted. The British pound had just had a significant drop in value against the US dollar. 168. Politics. Figure 9.10 Bank of England rate. Source. Used with permission from Bloomberg LP. In July and was making new lows for the year, figure 9.11. After the event, it put in a new low, then rallied, then put in another new low, then rallied, and then finished the month above where it had closed on July 1. That's some confusion in a short period of 3 weeks. The British pound rallied from there until the beginning of September, when it renewed its sell-off and eventually closed the year below the lows established in July. This is supportive of the patterns we have seen, that an event can interrupt the trend, but doesn't kill it. The event can provide and usually does provide excellent opportunities for quick counter-trend trades or even better trend trades from better levels than existed before the event. The generic 10-year UK bonds action was similar to what happened to Spanish bonds, but not nearly as dramatic, figure 9.12. The UK bond yield fell during the event and then quickly rose in the weeks after the event. The yield would go sideways for the remainder of the year, but end the year at the lows of 4.10%. For equities, we'll look at the FTSE 100, figure 9.13. This index had an initial drop that day of close to 200 points before recapturing almost all of its losses. It would go sideways for most of the month before resuming its upward trend. It finished the year at the highs for the year. Terrorism. 169. Figure 9.11 British pound versus US dollar. Source. Used with permission from Bloomberg LP. Figure 9.12 UK generic 10-year government bond. Source. Used with permission from Bloomberg LP. 100.